And here we go. Stocks the numbers back in action, doing a quick update here on Luminar Technologies, ticker symbol LAZR, listed here on the NASDAQ. This is a stock we actually looked at about 4 or 5 times over about the last year and a half, 2 years. I believe I did a video around here initially, maybe at about 6 and change. And we were just talking about how the company, I said in my opinion, the company needs some time. They're not bringing in much revenue yet. But at the moment, they were operating at big losses, right? There was a lot of bleeding. And up here at 6-7 a share, the company had a market cap of several billion. So in my opinion, I basically said, like we're seeing with a lot of these new companies, as you see, really, hitting the tape here in 2020. A lot of these stocks come out of the gate overinflated. They take as much as they can. Initially, everyone's excited, right? Because it's an IPO. This company, by the way, is LiDAR Technologies. And, it's like auto sensors and whatnot. So they do have some interesting tech that they can bring to the table. But again, the problem is we overvalue coming out of the gate. Everyone sees it's a new company. So they're like, oh, wow, IPO. I want to own a piece, right? This could be, who knows, the next Google, right? So I want to get involved. And the problem is, again, overvalued out of the gate, we pump it up too much, and then as the actual numbers start to come in, all the big boys on Wall Street are like, wow, this stock is tremendously overvalued. They're losing, what are we at here? Yeah, we're losing over 100 million a quarter. We're bringing in 10, 15 mil. So they're looking at it up here this whole time, essentially, in my eyes, as free money. Right? So they basically knew, oh, if I take a short position up here at 7, at 6, I'm going to turn around. It's going to be at 3. It's going to be at 4. It's, in and out, boom, no problem. So it was a simple layup for a lot of the short sellers on Wall Street. That's why I think they kept beating it up. The issue now is kind of what I initially projected over the longer term. When you're dealing with a situation like this, and the stock keeps losing value, what happens? You approach that dollar level, sub $1 level, and then you may have to potentially talk reverse stock split. And I'm not just saying it in my opinion. The company had some SEC filings here, again, Schedule 14A, and we can see this, this actually came out not too long ago, and they mentioned this in the news as well. Let me bring this up here for you. Luminar to provide a third quarter business update November 11th. So that's coming Monday. As we see, we're expecting a loss of 15.2 cents a share, estimated revenue 17.7 million. Reminder for stockholders meeting October 30th. That was about a week ago. So what happened October 30th? Let's find out. Items of business. Number 1, approve an amendment to our second amended and restated certificate of incorporation as amended the, quote, charter to, at the discretion of our board of directors, effect a reverse stock split with respect to our issued and outstanding Class A common stock, Class B, including any common stock held by the company as treasury shares at any time prior to December 31st, 2024, at a ratio of 1:5 to 1:20, with the ratio within such range to be determined at the discretion of our board of directors without further approval or authorization or authorization, a little too much New York in my voice, of our stockholders. So basically they're saying we voted about a week ago on the reverse stock split. For some reason, everywhere I look, I can't find the result of this vote. I'm assuming, because I know some chatter was kind of saying like, oh, don't we have like 6 months to get back into compliance? And then, of course, other people were saying, well, this is going to, help out with the liquidity situation. And then if they reduce the number of shares, then they can offer more shares down the road, right? So it might be like a short-term move to possibly generate more liquidity for the company. But again, it's basically, in my opinion, to maintain compliance. And it seems like, I'm not necessarily counting the company out, right? Because we know contracts could come in, all of a sudden you get 1 or 2 big orders, boom, now you're a player in the space, right? So we can't necessarily count the company out. What I feel like is, I feel like the company sees that this struggle is going to at least continue for maybe the next 2, 3, 4 quarters, right? And that is 6, 9, 12 months of time, estimated. So if you have 6 months to regain compliance and get back above $1, but you see that in the numbers, your stock is probably going to keep struggling and Wall Street's not going to bring you back up to $1 organically, then they may kind of just be, heading this obstacle off, this issue off, at the curb, and they may just be meeting it head on and doing it before the shit really hits the fan, if you will, right? So they may be just kind of preempting this whole situation. But again, technically, in my opinion, it may have voted for the shareholders, may have voted for the reverse stock split. And again, it says that can happen anytime prior to the last day of the year, which is within the next 7 weeks. So in my opinion, I think the reverse split does go through. And as we know, the issue with reverse splits, it's not necessarily the end of the end, right? Because we've seen other companies like Fubo, again, perfect example, went through reverse splits, was operating at a loss, had to restructure. All of a sudden, they were able to start generating more revenue, increase the amount of subs. Now the stock's on the up and up. And even though it seemed like it was just kind of a stick in the mud, now we potentially bottomed out and, got our ducks in a row. And now we're kind of climbing up, doing that U-turn recovery. So just because they're doing a reverse stock split, again, doesn't mean the company's going out of business. The one thing that sucks is people basically know that a reverse stock split is kind of, for the time being, kind of putting up a little white flag, so to speak. So the problem is, even if they do, 1 for 8, 1 for 10, let's just say they go in the middle of the range, 1 for 10. The problem is, after it splits, that's when it starts to get hit again, right? And we've seen that time and time again with a lot of other stocks that we looked at. So the issue is, if the reverse split happens, the stock is probably going to immediately drop on that news. Then when the price adjusts, it's obviously going to pop up, whatever it is, 5 times, 10 times, right? Whatever they decide. Again, that's up to the discretion of the board. And then after it pops from whatever, let's say 1 for 10. So it goes from 80 cents to $8, right? After it pops to $8, it's going to slowly start selling off again because everyone, as I said, is going to jump on and short it again. So the problem is, even if they do a 1 for 10 and we pop back up to 8 and change, it's probably going to pull back to like 3, 2 again, right? So if you're not already involved, but you were potentially considering rolling the dice here, if the risk is worth the reward, in your opinion, again, in my opinion, this is a very speculative situation in its current economic state. So this shouldn't be a situation where, like, you move 10,000 into an account, you want to invest, you're looking at this because it might explode. In my opinion, this is not a place to start, right? When we're talking about investing. If we're talking about a separate situation where you have $100,000 in your account, everything's been growing nicely, right? Markets are raging at highs, and you have 2,500 extra bucks, so you want to roll the dice and take a shot. That's the type of situation that we're talking about here. So in my opinion, if you're really trying to grow your account and you can't afford to take a loss, this technically really isn't something that you should be looking at in my eyes. But again, down the road, if they do reverse split and all of a sudden the losses get in check and the revenue starts trickling in, maybe they put together 1 or 2 earnings beats, right? Then we can come back, we can reevaluate the situation. But right here in the moment, it's probably going to remain ugly before it gets better. Obviously, you had to be a shareholder on record of September 5th before voting on this. If necessary or appropriate, to solicit additional proxies if there are not sufficient votes. Okay. Yeah, obviously, they can adjourn the meeting to a later date if they don't get enough votes. But I have a feeling that they're probably, for those of you who own shares and get those emails with the votes, right? The voting power, you know that the board recommends how they think you should vote, right? So they're probably recommending for the reverse stock split. Because like I said, they see the writing on the wall. They see that the stock's probably going to stay under $1. So they just kind of probably want to get it out of the way, and then, we can sell off again, but hopefully over the next, 3 quarters or whatever, we turn it around, revenue starts coming in, and then the stock slowly climbs, almost again like we saw with Fubo. The problem, though, is that, in my opinion, I'm not seeing any big news, so to speak. We're maintained at a buy. This was about a month ago. Maintained at neutral by Rosenblatt with a $2 price target. But again, that was actually after last earnings. Yeah, so they're still looking for about 100% move from this level. Luminar Technologies Restructuring Program inflicted job losses widened to 30%. Oof. And that's another thing, like we always say too, right? And we saw that with all these EV companies. You overvalued out of the gate. Yeah, people get excited because you're a new company, so they pile in. You're collecting all of this money. You offer more shares all the time. And then, 3 years later, after you kind of screwed everyone over, you make an announcement like, oh yeah, we're cutting, 40% of our workforce. And that grinds my gears, because what that tells me is from day one, you had no business bringing on all of these people. Like what kind of, I understand you're being optimistic. Of course, you want the business to work out and grow like an animal, but also at the same time, like, you don't have to take on all of those people, all of those minds, all of those workers. You don't have to take on all of that labor and have that beefed up, overinflated payroll until you actually have the business coming in, right? I'd rather be in a situation where I have to kind of scramble to find more employees and new workers to help my business, take on this growth that we've been seeing, this surge in business, right? That is technically viewed as like a good sign for a business, even though, of course, it's very stressful. It's a good sign. Right? Now, if you hop on the other side of the fence, it's like, yeah, we hired, 1,000 people to work on our projects, and we're not getting any business, and now 3 years later, we only need like 300 people. Right? That's a shitty situation to be in. Because what that means is you've been paying out of pocket 700 people, hypothetically, right? In my example, you've been paying 700 people for kind of no reason. And you really didn't need them there. You were just hoping you would get to a point to where everybody would kind of have something to do. And it's just really unfortunate, because we see this a lot of times with a lot of these companies. And, they'll just drop people, shareholders will be down 80-90%. And then you hear like, oh, we're doing restructuring. We're laying off 20% of the workforce to get the losses in check. It's like, yeah, thanks, buddy. You should have did that 2.5 years ago, right? So that's why something like that really grinds my gears. But moving on. Raises number of jobs cut. What was it initially? The company had initially got it for 20% cut of its workforce. Now we can get rid of 30%. Honestly, in my opinion, you could probably get rid of 50%, but they won't say it. Said that its latest restructuring move will result in additional cash charges of $4 to $6 million. I mean, it doesn't matter at this point. They're losing so much every quarter. Luminar price target announced at $1 a share by Deutsche Bank roughly 2 months ago. Mobileye, what is this? Shifting what type of sensors automakers and suppliers prefer to use. Self-driving company. Next generation frequency modulated continuous wave lidars for use in autonomous. It added, quote, we now believe that the availability of next generation, this lidar, is less essential to our roadmap for eyes-off systems. Huh. That don't require drivers to pay attention to the road. This technology can help track the speed of objects. Used by car makers to build driver assistance. News announcement like Mobileye doesn't need to build a product that it otherwise could purchase. Interesting. The jump could reflect optimism that Mobileye is choosing to spend less money without sacrificing any technology. Shares of lidar, however, initially dropped almost 9%. The reaction makes it seem to indicate to investors, excuse me, have worries that lidar technology isn't as important as it once was. That is very interesting. Luminar shares have recovered. Stock was up 1%. If Mobileye buys some lidar technology instead of producing it, that represents a positive for lidar markers. It means less competition for those companies and a new customer in Mobileye. Yes, but will Luminar directly benefit from that because initially the stock dropped? If lidar systems were to be de-emphasized in self-driving technology, it would be a win for Tesla. Of course, everything's a win for Tesla. Stock's up 100 points in 3 days. Tesla's driver assistance technology relies on cameras only, not a combination of things such as cameras, radar, and lidar that other companies use. Musk says that cameras are all that is required. Yeah, it does kind of look that way also, in my opinion. Granted, I understand this other technology is cool and probably is useful. And adding sensing technologies like lidar does more harm than good. Radars and cameras don't always agree on what they see. Interesting. Elon and Tesla announced a partnership. Okay, self-driving cars appear to be coming soon. Right, Tesla Robotaxi event. Okay, so this, of course, I mean, geez, it's unfortunate because it could be the beginning of the end. If we fast forward a year or two from now and what Mobileye is saying does actually come to fruition, and all of these car makers kind of just agree, like, yeah, we don't really need your sensors. We're just going to, cover the car in cameras and just do it that way. Then obviously that kind of sucks for Luminar Technologies because that's basically what they were looking to get into. Now, I know people are going to say, well, LiDAR is used for a bunch of different things. They, use it, from the sky and they can look down underground. And so I appreciate all that. But again, if we were looking at the potential auto market growth and how, these might be in 10% of cars on the road. Now, all of a sudden, if it might be viewed as an inconvenient luxury as opposed to a necessity, now, obviously, we're talking about two drastically different things. Maintain overweight by JP Morgan, price target cut from 8 to 6. That seems to be the highest price target, but I didn't see an update since... Oh, no, that was after last earnings, August 6th. So, JP Morgan, they're optimistic. Maybe they're expecting an order to come in. Luminar Technologies maintained buy at Citigroup. Price target cut to 6 from 9. So, a couple of big names still have $6 price targets on it. And again, in the numbers based on recent earnings, as you see here, we're missing, we're bleeding more than expected, revenue's coming in light. But again, in all fairness, the company did get up above that 20 million mark. And then, of course, we missed. But we're looking for 17.7 Monday. And you can see also, shout out to Big Lou in the Discord, 70 Mustang, because he mentioned this one. And he said that, it got beaten up and we could potentially see a little bit of a reverse coming in. And you can definitely, if we get a decent report, or even if we miss again, but we get some positive guidance maybe moving forward, not even just next quarter, but next year as well, that may help surge the stock up. And you can also note, look at the volume. Big volume here over the last roughly 3-month period since last quarterly report. So somebody may know something, and we may have completely sold off. A lot of investors and traders may be feeling the juice is worth the squeeze, and now it's time to surge back up, right? So again, do I personally like it? Honestly, in the numbers, no, I don't like it. If as we said, you have a few extra bucks that you can afford to lose. Because again, the company's in a rough situation economically. So the company could go out of business, the stock could go to zero. Please understand the risks involved. But if you're able to take on the risk, then yeah, you may have a situation where even if they miss here and they drop, even if they miss here, you can see we're kind of in the symmetrical triangle since last earnings with the gap down. So even if we kind of stay in here and then like at the new year, at the end of the year, new year, we kind of break up and start climbing back up, we could potentially, like we said, gap fill, and we can come back up to 120 and change, 130 maybe. So that definitely is possible. But again, you have potential reverse stock split coming, and of course, we don't know how these earnings are going to be, right? And it seems like, again, looking back, we're not getting big news, big catalysts. Oh, this person gave us an order. We're collabing with this company. You know, like we're not hearing that like what we've been seeing from a few of the other stocks that we looked at recently. So Luminar Technologies right now is just kind of hanging out, and the fact that, again, they called that shareholder meeting, they're looking to enact this reverse stock split, and again, they said any time prior to the last day of the year. So in my opinion, that's coming soon, and if that does come, again, I mean, these earnings, anything can happen, so you can roll the dice if you like. In my opinion, if you can't take that risk, but you think the situation is interesting, I personally would wait for earnings to come out, wait for the reverse stock split. And then as they beat it up after the reverse stock split, that's when you can potentially consider taking a position. In my opinion, that's how I would personally play it. But let's look at stock charts real quick. Because the numbers here, let's look at the numbers real quick. Because technically in the numbers, I'm sorry, but it does look kind of horrendous. And again, we know that these companies go through these rough patches, or, you know, right as they get listed, they have to wait to kind of like prove the efficiency of their product, and they have to wait for orders to come in. We understand all that. The problem is it just never happened yet for LAZR, right? That's the problem, because as much as we might have thought, you know, back at $4, oh, the company is overvalued, it's not worth a couple of billion. Granted, we've seen that take place, right? We look at something like LAZR, and it made sense, and the stock sold off. We look at something like ASTS, and it still made sense, but the stock took off and kept going higher, right? But what was the difference? We kept getting news from ASTS. AT&T extends the contract. Verizon throws them $100 million investment. The word spreads. Everyone keeps buying. Now the stock's at 6. Now the stock's at 7. Oh, we completed our satellites, right? We excuse me, we jumped over that hurdle. Boom, stock goes higher. Oh, we delivered our satellites. Boom, another catalyst. Stock went higher. You understand? So the problem is, even if it's not like $100 million order that we're getting from Luminar, we're just really not getting anything. And now, after kind of all this silence and all this kind of turbulence, now it's like, oh yeah, we got to hold a meeting. We might have to reverse stock split. So unfortunately, this is just a bunch of information that no one really wants to hear. And that's why I feel like no matter what's going on, you kind of wake up and see LAZR red. But we can see that the debt has kind of been hanging out at about 660 mil for the last couple of quarters. As of last quarter, free cash flow minus 78. This time last year, minus 78. Right? You see what I mean? So I respect the fact that now they're like, oh, we got to cut 30% of the workforce. But as I said earlier, in my opinion, that move should have taken place at least a year or two ago. I mean, this is what I mean. You know, they screw over shareholders. They worry about themselves. They do nothing for 3-4 years. And then they try to like right the wrongs and you know, get the ship back on track. And, oh, we got to cut, you know, costs and we got to restructure. It's like, if it took you that long to figure that out, you are the wrong person for the job, in my opinion, right? That's how I personally look at it. And, you know, if this was a private company and I had like 80% ownership of the company or something like that, and 4 years later you turn around, you're showing me these financials, everybody would be fired. That's just my opinion. But technically the free cash flow, I guess, and yeah, improved by about $500,000. Cash was up to 140. Excuse me. Was up to 140. Now it's down to 54 million. So if we subtract cash from the debt, we're still looking at about negative 610 million. Assets outweighing liabilities in the short term. In the long term, it looks like a nightmare. And this is what we mentioned when we talk about the long-term debt, right? There's nothing wrong with these companies, kind of putting their money where their mouth is, believing in themselves and their staff, their product, and, taking out debt to, as we say, you have to spend money to make money, right? So sometimes you dig yourself into a hole so that you can, start producing your product, increase efficiency, build another warehouse, whatever the heck they need to do, right? And hopefully, over a year or two, it starts to benefit. Your revenue took that next leg higher, and you're slowly going to start paying down that debt, right? It was a good move that you needed to do. Unfortunately, again, we're not seeing any news, any revenue really coming into Luminar. So as we see, the liabilities, I mean, technically they're up, but they've been holding kind of around the same low 700 to 740 million range for about the last year and a half. The problem is the assets now are down almost 50%, and we can see the assets were just about neck and neck with these liabilities. Now it's about half that. So assets right now about 381 million, liabilities about 724 million. That is negative equity of over 300 million. You can see how it really accelerated just over the last couple of quarters, up over 100% just in the last 4 quarters. So now our book value went from just about flat to negative 73 cents a share, meaning that if this company closed its doors tomorrow, liquidated everything in its name, it would be in the red. And shareholders would not get anything technically. So we have minus 600 million roughly on the debt side, less cash. We have negative 342 million in equity. So now we're up to like minus $1 billion fair value. And then we come down here, and if we look at last year, we can see we brought in 70 mil, but it cost 570 mil to do so. So now 70 million minus negative 570 would be negative $500 million. So in my opinion, the quote unquote fair value of this business right now is negative $1.5 billion. And the market cap is 440 million, meaning this can literally reverse stock split and then drop another 80-90%. And you can see a market cap of like 20 million. And in my opinion, it would be 100% justified. And the problem is, again, you need that surprise. So if you can take the risk, sure, go for it. And again, if we get some random surprise of good news, the stock could go from 80 cents to $1.30, right? And you can see a massive return. So of course that's possible. Based on recent trends and how the company is performing, in my opinion, it's probably easily, you can say 70-30, 80-20 chance that they're going to miss and it's not going to go up, right? So that's why I'm saying, again, this really should be excess funds you have. This should not be money that, like, you really, really need to grow, because you have a very good chance that it's not going to grow and you're going to immediately take a loss. Looking at the revenue, though, we can see we had some little surprises here. This was a nice quarter here, and then I guess that momentum kind of stalled. 11-12 million estimates didn't seem like a problem, and now we can see that again, as we got above 20, we missed, and then we come down to low 20s and we bring in 16. Technically, though, this time last year, 16.2, this time they bring in 16.45. So again, is it possible? Can they kind of get their ducks in a row, take care of the negatives, and slowly build back up over time? Yes, in my opinion, it is possible. The problem is, time is not on their side. Excuse me, keep talking myself out of breath here. Time is not on their side, right? They've been in a downtrend for years. Now we have a reverse stock split coming. So, again, we never know. They might post 18 here, but getting these estimates now moving forward up to 21, 23, 28.89 million, that may be difficult. That may be difficult. But again, technically, right? Q4 last year, 11 million. Q4, well, yeah, Q4 2 years ago. You understand what I'm saying? And then Q4 last year, 22 million. So that revenue doubled. Q1 at 23, 14.5 million. Q1 at 24, almost 21 million. It's about 50% increase. And then Q2, 16.2, 16.45. So all of a sudden, that year-over-year growth all of a sudden stagnated. So that, in my opinion, could be seen as a little bit of an issue. But who knows? Because, again, we're looking for 17.7. So even if we do have 20, 30% growth here, 17 million roughly from this time last year, who knows? They might come in with 20, 21 million. Who knows? And maybe that's why the volume's coming in. Because people feel that this may have just been kind of a one-off quarter, but technically we're still expecting to see, 30, 40, 50% growth in revenue year over year from where we were back here. So that's why also people may be speculating, saying, it might be worth the risk here at 80-something cents. Let me just take a shot. Let me see if it could explode to $1.20 and I can make, 50% real quick. So unfortunately, only time will tell. I mean, we really don't see the writing on the wall. The only thing I kind of knew was that it was overvalued when we first looked at it back here, whenever it was, I don't remember. But, we saw the numbers overvalued, the bleeding. I think we saw like a descending triangle. We were expecting some breaks. And yeah, unfortunately, the earnings have just been light. But this reverse stock split news is just very unfortunate because I know people... Again, I know we get emotional, so, again, I'm not trying to jump down anyone's throat. Ha ha, I was right, you were wrong, right? I'm not that kind of guy, but it's just very unfortunate because I do remember back at like 6, at like 4.5, people were commenting like, oh, you wait, you watch, this technology is going to be huge. And see, that's the problem sometimes. The problem sometimes is that we as the investor believe in the company more than the actual board of directors, right? Because as we said, this whole restructuring, cutting the workforce, you should have did this 2-3 years ago. And that's the issue. So similar to what we saw with, it's escaping me right now, but similar to what we saw with a recent stock where I said, in my opinion, we may have had the right people in the wrong places and the wrong people in the right places. So in my opinion, I would actually get rid of the CEO and probably 90% of the board, but that's just me. But again, it may not be their fault because they may have just overpromised in the space they were entering and have now underdelivered, which unfortunately is a part of business sometimes. But we looked at basically the symmetrical triangle that we're in right now since last gap down earnings, and we could pop up, we could pop down. The MACD has been slowly rising, actually tried to cross to the downside, but instantly bounced and just kept climbing upward. So stock has been holding steady here, sitting above the 50-day moving average, technically, at 87 cents, moving average 85. And like I said, if we do happen to get a surprise, or if they guide that next quarter, next year, all of a sudden we're looking to rock and roll, then you may see a pump up back to above $1 organically. But in my opinion, I do think that reverse stock split is coming. RSI middle of the road here, about 51.33 on the daily. And if we switch over to the weekly, yeah, we can see we just been on the down and down here. Even when we did break above the mid-Bollinger Band, you can see it was very, very short-lived, and then the stock just kind of immediately dropped back down and continued that sell-off. So, could you see, like we said, 111, 120, 130? Absolutely anything is possible. In my opinion, unfortunately, I think it gets more ugly before it gets better. But RSI on the weekly down here, 36.25. But you can see, look at that volume surging in just over the last couple of months. So, looks like more selling than buying, but again, maybe someone knows something, and maybe investors behind the scenes are feeling that 2025 is going to be the turnaround year for LAZR. So, again, anything is possible. In my opinion, I don't know if I'd personally bet on it right now, but again, we know anything is possible and anything can happen. But shout out to 70 Mustang because he brought it up. And we have earnings coming out Monday again. And yeah, the stock got beaten up to sub $1. They spoke about the reverse stock split. So just wanted to do a quick update here for everybody on Luminar Technologies. And of course, for all you shareholders out there, I am very sorry that this one isn't working out for you. But we know that we win some, we lose some, but you know, we live to fight another day. And also, if you did happen to hypothetically go in heavy at like 7, and now you're down huge. Again, first of all, it ain't over till it's over, as they say. But also, I know it hurts, but in the moment, we have to try to learn from our mistakes, try to understand maybe the couple of reasons why this stock kept selling off, why it didn't work out for us, and then we have to say, okay, so now the next time I look at a stock, I'm going to look for, you know, this number to be growing. I'm going to look for, you know, the losses to be not as extreme or whatever, right? So learn from your mistakes. Don't just dwell on them and, you know, wake up every day saying, oh my goodness, I can't believe I bought that stock at $6. You understand? Don't do it to yourself. Learn from the mistakes. Don't dwell on them. Don't let them fester. And be optimistic. And put confidence in yourself that the next one is going to work out better because I just learned what not to do. But that's pretty much it. So I'll end it there, and we can see maybe, maybe Monday, Tuesday, we could jump on real quick, and we could look at what they actually reported and maybe what they're forecasting moving forward. But I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.